Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Thursday, February 13th, 2025. Today's episode begins with PPI coming out high. Yet, the market did not interpret this data as being inflationary because the PCE predictors are not rising, including healthcare, airlines, financial services, and insurance costs. These are used to help predict what the PCE is, which is the inflation. This is the major, biggest inflation gauge, the Fed favorite gauge for inflation, the PCE, and it comes out Friday. Personal consumption expenditures. Not this coming Friday, but the following Friday. Next week, there's not really any major reports, and the next big report isn't for a whole nother 2 weeks, guys. Snapshot from marketwatch.com for today. Again, this column here is the actual, middle was expected, right column was the last reading of this. Initial jobless claims. This is a weekly report. Didn't surprise us to the upside. Nothing going on there, but the regular PPI was higher than expected. Expected was 0.3%, said it was 0.4%. Core PPI expected was 0.2, and it came out at 0.3. Again, even though those numbers were higher than expected, these things were not rising, and so yields actually fell today. And we'll get to the charts in a moment. Only a few minor changes in the daily reminders. Make sure to watch Macro Update 21125 to hear me read through and explain all of these. We just had the PE ratio. We round up to 31 now. It's over 30.5. And the CAPE ratio also up to 39. New highs, guys. No other major changes. To hear me explain my crystal ball readings and my own portfolio, watch Portfolio Update 21125. S&P 500 poking its head above this previous top here. Last time we did this, we got rejected back down. What we really want to see is a closing candle. So either the bottom of a red candle or the top of a green candle closing higher than today's candle to confirm, yes, actually, we really are headed higher out of this little trend line here, above the previous all-time high top here, and then you know, maybe if we can clear this daily candle here, with a close above it, we may be reaching up to this previous trend line. Looks to me 63.31 is what I have here. Better chartists than I are seeing this go actually to 61.50, and I've heard some people mention 6,200 for whatever reasons. You know, Fibonacci this or that. None of it really matters. The main big thing is, can we close even higher than we went today? Does this actually have legs, or is this just overbought? Next, I want to look at TLT, my favorite place to be. I said yesterday, a move like this cracking way the heck down after building momentum to the upside meant that there was a strong chance of a snap back in the other direction, and that's exactly what we had today. Very interestingly, closing on this line, and so this previous trend line, which was support and now is acting as some resistance. You know, the question for treasury bonds is, you know, are we headed back down to this range to fight in here, or are we going to fight in here and then, you know, finally break back above that previous line? Another way to see where TLT may be headed is using the 10-year Treasury note yield. Notably, these charts don't work exactly together because TLT has longer duration than TNX, but you got to use both of them to really get an idea of where yields might be going as far as chart patterns go. And yeah, so yesterday's big green candle up, we reversed right back down to where we started. So The third thing I would like to check to see where yields may be headed is simply what's going on with oil. My understanding, by the way, is this Wednesday's candle to the downside has to do with what's been going on with Russia and potentially freeing up some of the oil supply over there because of the chaos. But regardless of that, oil tends to lead yields, and oil looks bearish. So if this is still any predictor of any value, it still says that yields want to go lower. Today's little green candle so far looks more like a little bear flag off of this large engulfing red candle, by the way. I think yesterday's show, it was when this is a 24-hour market, I believe, and when we had yesterday's show, it was only engulfing like I think two of the candles, and at the end of the close, this thing, look at how much it engulfed. 1, 2, 3, 4. Those are all inside. 5, 6, 7 candles were completely engulfed by this red candle. This is a very bearish move on oil, and with today's action, this looks like a bear flag more than anything. So it looks like gold is headed back down still. With yields not looking like they need to climb higher, the dollar was able to cool off a little bit today, quite a bit, down 0.85%, and gold actually going higher here, and yet not closing above, notably this, I'll zoom in, this wick here of Tuesday's candle. We need to see a close above that wick to confirm further bullishness. But, when you zoom out a little bit, it looks bullish now. Look, it's going up. And so, yeah, probably we're headed to the 3,000. I'd say we're probably headed to 3,000 at this point. I haven't brought up the Qs in a long time. The NASDAQ, the ETF of the NASDAQ, we're practically near all-time highs in this. It's amazing how resilient this market is. Every time, we think, maybe this is the end of the ginormous tech run that we've had for decades at this point, and it just keeps going higher and higher. If you're scared of high PE valuations, triple Qs is probably not for you, and it's not for me, but I find it interesting Mr. Market can be so bullish here. I mean, it's just incredible. Look, the post-COVID dip of 2022, this getting down almost to $250. Now we're more than double that. You would have doubled your money if you had bought the NASDAQ in this 2022 dip. Double. That's 100% return right there. Just absolutely incredible. Do I have FOMO? Do I wish that I invested at the bottom? Well, yeah, if I had a crystal ball, but Anyway, another chart that caught my eye today too is actually ARC-F. This is one of Cathie Wood's funds, the FinTech Innovation ETF, popping higher today. I scrolled out on this and I just want to note, when look at where we are. We had the enormous run from the COVID bottom when everyone, thought Cathie Wood was the absolute greatest genius in the world. Going from the COVID bottom price of this fund from $17 all the way up to $64. And then we had some consolidation back before going all the way back down to, $14 in that post-COVID dip or whatever. And then since then all the way back up to 43. I just bring it up right now because 43 happens to be the bottom of this little dip here, this little M pattern here. I'm astounded that this was able to get back up to that level so quickly. I thought maybe, ARK funds had its, fun time in the sun and we wouldn't be seeing that kind of levels, those kinds of valuations for maybe another 10 years. And instead, we're already back up in that range. It's also a little bit frightening in terms of, if you've been following the show, you know that I see stocks as being in a bubble. And, if ARK funds were to, get to new all-time highs in the near future, and continue with momentum. I mean, this bubble can keep getting bigger. I don't think it will, but that's just me and my crystal ball. Some of you watching may be like, well, Robschild, if you think it might go higher, well, wouldn't you want to buy it? No, it's too much risk for me. I don't understand how companies can get such enormous high valuations, and I know how far they can drop. I mean, just look at the the 22 COVID dip, going from, the price of $64 all the way down to $14. I wouldn't enjoy that ride very much, let's just say at the very least. And when you focus only on buying things that are undervalued, you don't have to experience that kind of volatility, and you can get very handsome rewards, very handsome returns with much lower risk. Another market continuing to be very bullish, KWeb, Chinese internet stocks. You know, you might be thinking it's a little hypocritical of me to be like, oh, well, it's bad that ARK funds are going up, but it's good that Chinese funds are going up. Well, it's because I see Chinese equities as being massively undervalued. They're making a heck of a lot of money compared to the cost of the business. Again, a balloon being held underwater, I just want it to rise to the surface. We're not there yet. Again, I like using this hot air balloon reference. I feel like I'm remembering Benjamin Graham talk about actually a hot air balloon in a similar way now that I'm searching my memory. Point is, for my macro show as well, when you're in a hot air balloon and you're just looking up to see how high you might be able to go, it's easy to forget how far the ground is away. And KWeb is a hot air balloon too, but the basket is underwater, and we're just trying to get it. We're just trying to get it to the surface, and I don't need it to go to the moon. I don't even need it to get off of the surface of the water. I just need to get it up to the surface of the water. And for me, that's around $50 in the value of this, the shares of this ETF. With Chinese equities showing strength, it is not surprising to see Dr. Copper breaking higher. I questioned yesterday this little pattern here, just fighting up and down. My best guess is that this has to do with good news coming out of China, or regarding China, involving China, however you see it. China and copper, they're connected, and they're both bullish. So what else can you say? Bitcoin becoming more popular as a reference to global liquidity, not showing the kind of strength that we're seeing in the S&P 500. Again, Bitcoin has often become a better leading indicator of what's going on in global liquidity, really. And just, for today alone, I mean, all in all, we're still fighting here. The bulls and the bears are fighting, and it keeps going sideways. And like I've said in shows before, the longer you go sideways, the bigger the break. I think this is the last fight before we break up or down. I don't know if it's going to break up or down, but I think we're going to break out of this channel that we had going previously. Lastly, MSOS, cannabis ETF. I like this position because back, let's scroll this out here. Back when this fund started, it was at a level of $55 a share. Remember, this is an entire index of companies. This isn't just one company. This is an entire industry. I think that the people, again, invested in here are overly fearful over the new government and thinks that, policies might shift against them. I don't think they're going to shift against them as much as a lot of the participants. I think there's just an unbelievable amount of fear still in this market. But I'm going to say we just kind of, to my eye, hit sort of a bottom here, and I'm seeing a higher low at the moment. So we'll see if that holds. But, we'd been going down and down and down and down. This could be the ground floor. I started buying it around the, I think, $4 range maybe, yeah, between 4 and 450. And so because it dropped all the way down to 350, it was 2% of my portfolio. It dropped down to 1.5% of my portfolio. So why not average in and get some more? I don't think this industry is going away. I really don't. So it's an exciting place to be. And if I'm wrong, if I just flat out lose 2% of my portfolio, well, that's okay. Sometimes the market moves and 2% in one day. I'll be able to sleep just fine at night. And that's all from me and my crystal ball. I hope you enjoyed. Thank you for watching, and see you next time. Robschild.